Hey there, my name is Karen Jones, Content Editor for the Society of Technical Analysts. Today we are looking at sterling versus the US dollar daily chart, and in particular, just ahead of the budget on Wednesday. In particular, we're looking at this base. It's a 3 big figure base. You take the measurement from the point of breakout, i.e. 123.37, and that gives us an upside measured target to 126.37. Now, you should be aware that base measurements are minimum upside targets and there is scope for an overshoot. If we see that, and given that the market looks pretty directional at the moment and we have a confirmed buy signal on the DMI, there is a risk of that happening. We're going to put on some Fibonacci retracements to see where the next resistance levels are likely to be on the top side. So above 126.37, we have the 61.8% retracement of the move down from July, coming in at 127.24. So that would be my first resistance point, and it coincides quite well with that high there at 127.46. But I do think there is a risk for these highs at 128.19. They're from the middle of August. And we notice that they're in close proximity to the 200-week moving average coming in here at 128.42. So I think if we see an overshoot, we should allow for that zone to be reached. Don't really think it would go beyond there at this point for two reasons. The RSI is already high. It's heading towards 70 here. So it's already on the high side. And the other reason why I think it would stop around that level is we do in fact have a very long-term downtrend all the way back to 2007, coming in at 130.75. So while I appreciate that we do have some room here on the top side, it does suggest to me that it should be fairly limited. And I would also point out, in the same vicinity, we've got the 55-month moving average at 128.29. So that does seem to be quite a reasonable area for the market to find strong resistance around this 128.19, 128.5 area. And then should we see the market overshoot, I would expect to see some kind of profit take in and around that zone. On the downside, near-term support is offered by the 200-day moving average at 124.46, and that is reinforced greatly by the breakout point from 123.37. The uptrend is some distance away below the market and is about in the same vicinity as well. Thanks very much.